Boy, talk about spring fever. It's 70 degrees outside here. Pretty damn nice. We got one more day of it, too, before it gets back into the 40s. So it's been a welcome respite from winter, which can be pretty darn cold here. Looks like the cold weather is going to stay in the northeast, east of the Mississippi, through Chicago, New York, Pennsylvania, Massachusetts, etc. We're going to be really warm the next week here also, unseasonably warm, so not complaining at all, but we sure could use the moisture. Okay, this morning we had news, durable orders that we said could come in less than forecast. Transportation, both numbers were big misses. Does not bode well for the future. We said consumer confidence could come in much higher than forecast, and we thought new home sales was on our default number at 450. That one actually came in higher than forecast. So we have a pretty big rundown in front of the news. So the news, if as forecast, the market should have rallied up. Some people were playing it from the short side. So numerous setups to be short. This trade took forever to develop, and again, it's because of what we talked about before the market opened. If the Fed was going to buffer, it would be through the 50-lot trader because it advertises. It says size is buying right now, and it makes for pretty cautious selling. So we've got 4 sell signals right here. The fourth one, a move out of the middle, finally does work. And then right down here on this bar, that is the peak long liquidation, and the peak buying starts on that bar. And then this market has been generally higher all the way up. We started off with 30 to 32 as resistance. That worked pretty well. Then we said it got through that. This 35, 38 area would be where resistance would be. So everything's pretty much worked out as planned on this. Very, very difficult to break a market without this player. Very, very hard to rally a market without the 50-lot players. So this market, we actually did pretty good on this morning. So pretty pleased with that. Okay, we have an outside day. And outside days typically yield trading ranges. There's no news tomorrow. There is the FOMC. And they'll be looking for when will the Fed start to raise interest rates. Right now, the Fed has told us no sooner than April. So the minutes, et cetera, will be poured over. So I'm guessing we got a trading range market tomorrow because of the FOMC. Don't go well duh on me. Well duh, Charlie. That really took a lot of horsepower to come up with that one. Okay, looking at the day session right here, it's pretty square distribution. A little more volume below 2025 than above it, but that could change this afternoon depending on the volume that comes in. We've got a pretty good volume day, going 1.6 million shares. So again, we've got resistance this morning we thought was going to be 44 to 45, then we lowered it to 35 to 40. Then we lowered it into that basically 30 to 32 area, and that served us well early. We had support starting out, best support 25 to 30. We started off at 30 to 35. Then we lowered it to 20 and 15 to 20, and that came in. It did go below 15, but by a hell of a lot. So we can make the adjustments on the fly. But when you look at this distribution right here, it is pretty square. And that's a D, and this also favors a trading range. Now, because we're low in the market, the most potential tomorrow will be to the upside off the FOMC. If they say April, the soonest they can raise rates, we've got a chance to rally this thing back a little bit. If they say March, it should come off a little bit. So right here, looking at where we are on the top, we're going to sell 34.36, 39.41. On the buy side, we'll like the 2022 Going to open it up a little bit and give it some room, plan on a trading range. Our number 2 levels, I think, will serve us better than our number 1. I don't think there'll be a lot of news coming out of Saudi Arabia. There usually isn't on these type of thrown together get-togethers, because the topic was the death of the king. It was not what are we going to about oil prices. So I don't, maybe a few rumors or something like that. So it would be nice if crude held up in this 45 to 50 area. And I don't say that, you know, not appreciating what lower energy prices do mean for the United States. But so much of our growth and so many of all of the really, really good paying jobs have come from energy. They do come from manufacturing. And these are really, really good jobs that are tough to lose. Okay, we got an inside day for the note. That usually means trading range. And we have tomorrow's FOMC, which usually yields a trading range. We do have crude inventories tomorrow. Doubt if they'll play. So the F1 screen on this tells us that capital didn't move in or out of the market today, kind of stayed there. So this morning we have an up distribution of P. This afternoon we have a down distribution of B. So tomorrow's dynamic is the 2-year auction. Sorry about that today. They're normally Tuesday, Wednesdays, and Thursdays. And when I was skimming the calendar, my eye saw Wednesday, my mouth said Tuesday, as per norm. So right now I think we can go a little bit lower. So we're going to put 13 to 17 as a buy, a little bit softer in the overnight session. We're going to put a question mark at 21. Maybe a little strength in the stock markets. Then 5 to 9 for buy 2. But we may have to move this up for 30 seconds. And on the sell side, got a high at 27, 26.5, 22.5. So selling failure to take out 23, 27. And then our 31 to 03. Okay, the knob spread this morning, we started out at 20.07. We were at 20.09, so we lost 10, 30 seconds in that spread. So some pretty good profit taking in the knob spread today. And the strength of buying went into probably just spreaders. I didn't see much or the other. So right here we're low. We got this pretty clean break down here at 8 to 9. So we're going to make 5 to 9 buy 1. I think we'll go a little bit lower. Put a question mark by 13. The emailing can rally this afternoon. We'll probably do that. And then 29 to 01. On the sell side, the spill up here was from 27, so we're going to sell failure to take out 28 to the buck. And then we'll take 7 to 11 for sell 2. This contract moves pretty well. So and looking at gold, gold recovered today. And our trading range is still holding. So we've got resistance, 1300 plus or minus. We're going to play it's a P. We're going to play for it being a little bit higher. then 4 to 6. Don't think this market can get up and run. And it made 94s to get in. Don't know. It just that's where we are. So I think we can get stops above this, but you never know. And they usually, after a strong P or something like that, they usually will set an edge in London because that is the gold market. I like the 85, 87, and our 80 to 82. So I look for a trading range here too because of the FOMC meeting. Don't see that a lot can go on. Okay, crude tomorrow. We have inventory, and again, they don't play a lot. The markets start to feel like we're, unless we go into a really, really steep recession, that we might be bottoming right here. And there's a lot of the economics say that $40 to $50 crude allows deep Gulf projects, the North Sea, maybe some of the tight shale to be boosted. And one of the things that's interesting about this horizontal drilling, if you drill vertically into an oil structure, you can cap a gas well. You just don't do anything. You just turn it off at the top because it's pressurized and it flows that way. But on oil wells, after you get the initial production out of them, you got to lift it and you replace. You flood with seawater, you flood with CO2, or you pump them out. And on oil wells, you have these little narrow pay zones on a vertical, but on the horizontal situation, you've got maybe a mile up from the well. So they think, in their experience, that they can shut in current production in these oil wells, these horizontally drilled oil wells, and bring it back pretty quickly. So if the price of oil stays down, and if it's like gas, they can bring it back pretty quickly. Saudi Arabia's major damage will be done to Russia and Iran. I put an article up this morning on Russia because most of the contracts inside of Russia are denominated in rubles. That as long as it stays that way, they get hurt on their exports because the price is lower, but it doesn't really impact the domestic energy all that much. And that would be the same in the United States. Our contracts inside of the United States are denominated in dollars. So the disruption comes off the price of oil domestically for us, and for Russia it comes internationally. So we've got this 46 and a quarter, 46.50, sell 1, 46.75, 47, sell 2. We rejected prices over 35. On the buy side, we're going to make it 45, 45 and a quarter for buy 1, and then buy 2, 44.50, 44.75. And my guess is we'll probably see a build in crude oil tomorrow. And last but not least, the euro. The euro was pretty strong today. The article was really pretty nonsensical. They talked about inflation being under control is what rallied back the euro. That's not what rallied it back. Our news down here started, and we've talked about short cover because, in less than a month we've taken 11 points out of this. So if the Swiss franc sells, the euro can come up. If we get economic news that shows the European economy is stronger than the United States, it can rally. But the big dynamic is short covering. It's not inflation because the European Central Bank wants to increase inflation. So that one doesn't really hold a lot of water. So 14, 14.10, sell 1, and we'll let them get stops above the overnight. We'll make 40 to 50 sell 2. I still think structurally 115 is a number. It's a big number. 40 to 50 on the buy side, and then the buck to 10 for buy 2. And the FOMC meeting will affect this, so this market could be pretty quiet too tomorrow. And folks, that's it for the 27th of January. What a great day we had today. And we'll get after it again bright and early in the morning, 6:45 a.m. Central. Y'all have a great evening.